What a week we had, isn't it?
Oh my God.
Man,
The
can't.
worst week since December.
It did look like, and luckily I was away from the market whole week. I had a bunch of other family stuff going on. I didn't trade
So no
much,
heart attacks.
so no heart attacks. But it would be nice to see, things went higher than going down every week. It doesn't look good, especially for the long-term account. Everything I'm sharing, educational purpose only, please. Your money, your risk, and your loss. So what you are looking at a chart of S&P 500 for index since year 2000 and 2023. I'm sure many of you know many of you know what happened in year 2000, right? Do you guys see? I want you guys think about the similarity what happened back then. We know that there was a recession happen around that time, and since the recession happened that time, what type of stock or equity got hit big time, and then since then it came back up. So if anybody would be investing money at that time on the top peak, and what happened next 3 years, then you stayed in the market and that came around, it took you almost like 5-6 years to get your money back. If you'd be just investing in equity, S&P back then. But some of the things that time also Fed did right now, same way that there was a short-term recession and some of the things will go over soon. But I want to just keep these pictures. 2000 went down all the way at the bottom and turn around. Now, we are looking at same pattern, but what do we see here? S&P did it really get hit much comparing what happened before? Now let's look back a monthly chart. On the monthly chart, I have it S&P last year, or not last year, in 2020, we know that pandemic happened around March 2020. Look at S&P, big drop happened. Since then, from March 2020, then S&P was going all the way. At some point, you see when it dropped March 2020, all the way high, now coming back. So a lot of discussion is happening right now, is what is Fed doing it, or what's happening with GDP, those. Now come look back at this Fed increasing the rate. Now let's get back to 2000, year 2000, what happened? When year 2000, this S&P, when was almost going down and recession happened around that time, right after recession happened, or when they declared the recession, look at S&P, how many times, each indication you're seeing how many times Fed increased the rate. When whatever Fed rate today and back then happened. One time, two, three, each, it tells you. And right before 2001 and then happened, last increase was, you see that big increase, about 50 basis point they increased. So know that. Now current expert with the current market, I have been sharing with you that this year in January, you saw Powell came along. He said, okay, we see the good sign in GDP. We see the good sign in economy. We think it might be, they might hold on to being more aggressive. And market just celebrated in January like crazy. We have seen it. And it came back up and a small increase. Now we are almost close to 5%. Now, last 2 weeks, we have seen a lot of the earnings came along, and we see that some of the numbers are good, but most of those companies, that 70%, 80%, they adjusted their guidance. They adjusted also, they reduced their profit margin and margin in coming quarter. Then investors are getting more and more concerned and pulling back. More sell-off is happening. So final hike on 50 basis point in when we saw that into until 2020 is this one happened 20 basis point we saw. Now what you are looking at recession. Now a lot of people kept saying the recession coming. Now look at the pattern. What happened before? In on the left side, you are looking at the S&P is when S&P at the top you saw what happened, and then that time GDP is the one. See what happened. GDP already almost went negative. Very short time, two different quarter in a year went negative in 2001. And that time what happened? We know the tech bubble popped and the market got crashed. So GDP also got hammered. So now that what you are seeing that currently that when Fed chairs from Michigan and different states, they are saying that they do not think that economy is strong enough. They think they may have to be aggressive of increasing the rate. Look at that rate was in 2001. What was the highest Fed rate was? Almost 6.5%. We are not 5% yet. Because the Fed, their main goal now, they want to bring it back, inflation bring back to 2% areas. So that's their magic number. So if they're going to keep using this ammunition that keep increasing the Fed rate here from negative, it was at some point before when pandemic happened and right before that, Trump administration came along slowly, and since it came back up and it started reducing. And look at that, at some point we went negative. Now trying to get back to, if they need to get back to 6.5, do you think they're going to be saying no? So what's going to happen with the current stock market, especially equity and commodity, is going to get hammered? Nobody knows. I'm not saying that history can tell you that what might happen, but at least we should be prepared for the worst. I'm going to pause here, and I want to hear you guys' opinion. Anybody has anything else to add?
Yes, I do, of course.
Oh, I know. I knew that last time you were talking to us. Yeah, please, by all means.
So have you taken into account the underlying theory that this was all manipulated and that in March 2020, inflation was created, and now they are creating this whole noise about inflation? Or do you just stick to what you're seeing on the trends?
Inflation, I do not think it's a noise based on what you see, that GDP and historical data, GDP, and also like macro level data in unemployment. Look at that in the supply chain labor market. You are seeing the GDP is not going to be growing as fast as what happened before. All right. So I do think that at some point that Fed has to come up with something, either admit it that we are facing a recession, reset everything, and readjust all of their historical calculation number, and make sure that they bring people in the market that, okay, we always wanted 2%. It's not reality. We cannot go back to 2%. We have seen some of the stronger number that currently, that milk or gasoline, what you bought back then, no matter what, it will never come back to that price.
So you don't think this is manipulated, Mushi?
Yep. Some of the things they have to start admitting that they're wrong.
Yasmin, may I ask you something?
Yeah.
Do you think there's ever not manipulation going on in the markets?
No. I'm going to post a link, you guys. You got to listen to this guy, Ed Dowd, being interviewed by Tucker Carlson. So you'll realize just how insidious this is. But never mind.
Well, Tucker is a con man himself, but
yes, but yeah, I was surprised he had this interview.
Tucker is the biggest one of them all.
Yeah,
Then
but he's not the one who's talking. It's Ed Dowd, who is a Wall Street expert.
Oh, wow. Okay, yeah, that'd be interesting. I'd be interested.
okay.
Thank you.
So let's get
Back
back.
to
So yep, right.
back to Mushi.
So now bubble pop. So we know what happened to 2000, 2001 tech bubble, dot com. Those who invested in dot com, boom, it happened, and then all those people lost their retirement fund, and so many people even killed themselves. So many sad things happened back then.
What I call dot bomb,
Yep.
or some people call it dot bomb, right?
Yeah. Now what you're looking at, the S&P S&P return back then, when the day the market got crashed, and then right right before when S&P went all time high. Look at S&P when all time it went high and then started going down. Things went bad, and they track back. What really happened and how much from back then 2000, 2009,
I think there's a
one
procedure.
since 1999. The return, if you
Mhm.
people lost by investing in that equity side, and the recovery side what happened, right? So now if you compare that historical data with the chart today, for us since March 20, this is like since March 20 till today, this this is what happening today. If you look at now, almost like over 500 days went by since March 20, market went down, but S&P, we know right before that S&P at some point that it came down all the way high, and just like look at that comparison between these two, you see a lot of similarity is happening. It's good correlation between these two charts, what happened in the back then and what's happening now, with all the noise, Fed, unemployment, recession, you name it. But one thing we know, around that time, blue time, they declared it was a recession, and now here they are saying there's no recession here. They don't see it, but they think they think that something could be in between, right? In Fed. So December 20 here this year, also at December 2021, you saw the chart I showed you earlier. S&P touched all-time high, and so many Wall Street, I remember Wall Street analyst and everyone saying we are going touching 4,500 and so on. All passing all of the, even Morgan Stanley analysts, whoever you name it, you talk it, they're all pumping the market, and retailer got hammered, right? Or most of the retail investor who did not know what to invest doesn't look at buy AMC, buy GameStop, buy crypto. It just kept the pumping, pumping, pumping. If you'd be looking fundamental PE, nothing. There is no real fundamental anymore. So similar thing was happening just like back then .com world. Then here all crypto assets, a lot of bubble companies just showed up. The zombie companies. I see a lot, many analysts in Bloomberg analysts, others are naming them zombie companies popping up. There is no real that revenue coming in, profit margin. They just keep pumping, showing the people that someday is going to go to the moon, and people are just buying crazy. There was much more. Oh, sorry, Ravi. Return of S&P, look at that in a number of days back then. If I'm right now comparing what happened to 2000, then now look at that return, the highest through on 1995 at back 2001, and since 2017 S&P return. Look how much it went higher if you'd be just investing in index alone. This one I already showed you guys last time. Look at what happened. Look at what market expect. Those who watched earlier, market expect 525 and stay there. Now that they are all the Fed, they're changing their tone. What may happen? Even the meeting minutes came out last week. There it didn't say much. Powell himself did not come on strongly saying that we still feel like they are not going to be increasing after 25 basis points. and stick to this, now they have a different tone. You have seen that the tone is saying, no, forget about cutting rate cut, but increase they may have go 50 basis point, and how many times we do not know. If that happens, do you think that it may not go over 6%? You just look at back what happened before and what's happening now. So there might be bad thing may happen on in equity. So be careful. So based on that, what could happen this week? No idea. But here, what you are looking at last week, Nasdaq got hammered 3% last week. It went down. Nasdaq, S&P 2%. If you look at last 3-4 weeks, every week it just keep going down. It lost one of the biggest the support 4100 on S&P side. It lost that. How low it can go down? Never know, right? So when I'm looking at all this and just looking at other people, my God, it's going to go to the moon. If you have the money, sit with the money, let's see what really happens in the next few more weeks. I do think that, it can go down more. So far, I'm last 3 or 4 weeks, we are down. 2-3 weeks, it may flush out a couple more retail investor before you see the real money coming in. I think this is what I have. I would love to hear you guys' opinion, and just so far what I shared.
Hey, can I ask a question?
Please.
Does anyone think the United States is going to could default on its debt?
I don't think that's an option.
I don't think that's an option. I think eventually they're going to have to pay it. So it's just
So
they may use it as political grandstanding, but at some point they're going to have to come to their normal mindset and release it. They can't just stop now.
Right, but people think, I guess everyone thinks that, interest rates are controlled by the Fed, but is there any scenario where the Fed is going to lose control of what they have over the interest rates, and then it's just going to basically go its own way?
If you're talking about the last time we're ever going to pay our debt and never pay again, I don't see that happening anytime soon. But I think you're right. At some point, what do they say? It's going to come home to roost.
The way they're going to pay their debt is by the gold.
By gold, but it's not gold based. The problem is our money is not gold based.
Yes, so every fiat currency in history they failed, and US is not like any other.
You're telling me that before US created a fiat currency, in the old history there was fiat currency before?
All of them.
I didn't know that. I thought US was the very first country in the world
the gold
that ever created fiat
the
currency.
gold and silver, the YouTube channel I showed you, that will
They
give
talk
you
about
the
that?
knowledge.
No, I understand that it's a disaster,
Yes, so it is
but
not.
it's never been done
It's
before
not a
either.
tech bubble. It's an economy bubble.
Oh, I get it, but I don't think it's ever been done before. As long as the mightiest country in the world, mightiest military in the world says, you better accept my money, they're going to accept their
Rome
money.
was like that.
Rome was like that, but they didn't have fiat, wasn't it? Based on the gold
But
reserve?
they had a copper coin, and
Yeah.
they were making a lot of it, so there was the inflation of it.
That's different.
And they
That's
were like
different.
breaking their coins to make more coins.
Wow. So they did have to
Yes.
spread it a little bit.
So
I see.
we're in really bad trouble.
Yes, no, we are. But I don't know when it's going to end.
That's why I'm
Yeah,
here to
I don't know when it's going to end.
Do you have any advice?
I think don't count on your retirement money because there won't be any by the
It's gonna be
time.
paper. That's why I'm telling you. Are you holding any physical gold?
No, I should.
That's
Huh?
the real money.
My sister buried it in her yard. So if I give guys her address, everybody will be there. But seriously, that's what they did. They have this huge place
China,
where you can't even see it from Google Earth. It's all trees. You can't see the house. And who knows where they buried it in that yard. But they're ready for the end of the world.
But
They all have guns and they're ready with their gold.
gold is
there are also some religious beliefs.
They're kind of wacko like that.
There's
My
like
sister and her
water,
family.
like drying up in some places. It's in Bible.
but there hasn't been that much.
Okay, sorry, Mushi.
It is good, right? Good discussion. I
It
want
is.
to hear others' opinion. And as far as my DAX, this is all I have.
I'm too young to tell you.
You're good?
Yes, I'm good.
Well, thank you, Mushi. Any questions for Mushi?
They want dollar pound.
Right.
I mean, nobody could really answer your question, Vijal, as far as the end of the world.
Here's the thing. I mean, I'm not saying that's the end of the world, but I'm just saying worst case scenario is that the Federal Reserve loses control of the interest rates and they just pop up to 20% because the US defaulted on its debt.
So
Like
you're
that's
saying
worst.
like it did in the 1970s when it was at 20%.
Yeah. So worst
It's
case
not-
scenario that
it's
rates
not
just
gonna
shoot
happen.
up.
20%
it-
is not gonna happen. He's like, it's
But
not-
remember, your chart doesn't go back to the 1970s.
you know, it doesn't go because there are
It
other things.
was high, almost as high as 20%.
Yep, well, I agree with it. But for now, right now, everyone panics because oh my God, it's not going to go. It is,
It's
but
bad. It's bad, but it's like they don't have anything else they can do.
yes,
Their hands
exactly.
are tied.
Their
They
hands
can't
are tied.
increase unemployment.
They
They
yes,
can't decrease inflation unless they, right, and they want their power back.
By gold.
and
By gold.
also like a lot of people is
I'm gonna have to
still,
watch this guy's videos.
you know, a lot of people are still in the labor market are not really working. They have because of the mistakes they have made. They throw those stimulus package in the market. Many people, whatever they have done it, now they found other ways to get the benefits program, and then labor market still is not there what they needed to be since pandemic. So slowly, more people are looking for work, but not that aggressively. I know a bunch of people still that since I'm running a food bank, they would rather starve or just live by, but not to go really go find a job. That is not on their priority list. Okay, so that's gonna happen. You see, the unemployment rate is not even back then 70s. Look at the 70s unemployment rate back then. It's huge. There was no job. Now we have jobs. People are not willing to work. So Fed has other ways to go after than just increase the Fed rates.
Yeah, the best way to do this is to decrease your balance sheet, right? But that's not what they want to do because decreasing the balance sheet will affect their rich corporate friends versus increasing the interest rates have a direct impact on the middle class. So they prefer to hurt the middle class and curb spending than to reduce the balance sheet.
Yep, agreed. So they have to start looking at other ways besides just only one ammunition right now. You know, Fed kept saying we got the tools to bring the inflation back to 2%. But this cannot be the only tools.
Yeah, 2% inflation, we are never going to see that again because until the amount of money that is in the in rotation,
yes,
unless that reduces by at least half, because that's what happened, right? You put in 4 trillion and you're surprised that you have all this inflation. That doesn't make sense. So Fed created this inflation by putting in so much money.
Yep, correct. So it's in the rotation, yeah, and now they gotta start looking at like what you say, readjust those balance sheets. So that's exactly what now might happen now as other Fed chair is talking about. We do think that we can go aggressive. They're right. They can go aggressive up to, like you see, this coming year. Although the market expects 2 hikes, it can go be just like same thing like before. It can keep going up to over 6%, not 20%, and they have to start looking at other areas to bring back, or just like something in between recession, call it whatever it is. It may happen with current that earnings came out. It won't be surprising to see some of this that S&P is losing 2 quarters in a row and then call it officially now we are in recession, whatever for short term or long term. It happened in
You seem to come from the premise that what the Fed is doing is right, or that they have the power to help us with our economy. I think you need to read what the Fed is all about. The Federal Reserve, not the federal government.
Federal
Big
Reserve, I'm
difference.
talking about, right?
Right? The
Yeah.
Federal Reserve is all about how they're going to control the world economy. Please, please, please go read up, because there is information that is being discussed that the banks could have a run on the bank, and then the US dollar can go to zero. To answer Bijal's question. And Bijal, Federal Reserve has nothing to do with getting our economy balanced. If they are increasing interest rates or whatever the hell, they are not going to default, because the Treasury is they're in bed with the Treasury. Guess who the Treasury Secretary is? The ex-Federal Reserve Chairman. What's that woman? The gray-haired, whatever her name
Janet
is.
Yellen.
Yeah, Yellen. Piece of shit, man. Excuse my French. But
That's a good
she
point. That's
is
a good
in
point.
bed with the Federal Reserve. Guess what they do? They're kissing cousins, right? So they are going to manipulate whatever happens. Guess what the Treasury will do? They will print more money. So why would we default? We will never default. The greatest so-called country, I'm sorry to say, have got us by the short hairs, us the people. So let's be careful not to get mesmerized by our government and Federal Reserve.
So basically, you're saying that that inflation can just keep going up and up and up and up.
No, it won't go up. Even now, it's pseudo inflation. Ross just said it right. They're 2% bullshit. I mean, come on, you guys. Have you all studied economics? Do you know how inflation comes to be? Do you all know what it has got to do with macroeconomics? One of the things that we are looking at is the capital markets, and we think that's the economy. It's only a tool that's being manipulated. Please go study economics and what macroeconomics is about. Then you'll understand what interest rates do, what the people's employment rate is, and how those are being balanced. We are not in an inflationary state as such. We have increased prices, but that's what economics is about. When there's high demand, prices increase, right? And why do we have high demand? Because the population has increased. Because the wages, people have money in their hands, or the credit card, the shadow banking is supporting them. So there's a lot of stuff in economics that you all have to think about.
Welcome to the conspiracy channel.
It's not conspiracy. I'm talking economic
No, I get
theory.
it. I get it, Yasmin. We're talking about it in here too.
We are talking
I don't
about
want to scare away
economic
some
theory,
people.
Ross.
I don't want to scare away some people,
This is
Yasmin.
pure economic theory. Understand economic theory.
The market will scare away people, Ron.
Yeah, that's true.
Right.
If they're scared of this, they shouldn't be trading in the market, right?
Right.
The market is a lot scarier.
Yep.
Or you know what I do with my trading style? I go with the flow. I look to see what the stupid people are doing out there, right? Really, you got to watch behavior. It's not to do with the Federal Reserve. I listen to them because of the sentiment, because they influence sentiment.
They influence it, exactly.
Yeah.
So read the lips. They say read their lips and see what they're trying to get out of it.
Right.
I mean, one day up, one day down. One day up, one day down. You know
Psychotic.
what?
Like there was
Market
no
went down
real
on
news
Friday.
this week that should have driven it down this hard.
Yeah.
Yep.
You know
Just like
what? On Monday,
no reason
you
for it to go
watch.
as high as it
Market's
did.
going to go up.
Big boys are selling.
But on Tuesday,
Uh-huh.
it will be
We're
sideways.
just telling you.
Yep, that's what happened.
February
Monday, always.
28th.
Monday, Tuesday, it goes up. After that, sideways, it kills those who is doing option. It kills your premiums.
Yeah,
And
of
those,
course.
yep.
So
Those
you're going
who,
to sell against it. I
yep,
do calendars all day long.
yep. Those who is
Okay.
seller like you, Yasmin, is for you. Is the time to stay in the market.
Vinny?
Yep. Thank you.
Thank you, Mushi.
Thank you, Mushi.
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, Please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom